Okay, be sure you've seen the previous video because this just continues right after that. And I'm already in this trade, but I'm going to show you how I jumped into this trade. Now, if you've seen the last video, you know what I said I was expecting to see at that point. And a single candle order block was exactly what I wanted, and I finally found a single candle order block. And when I found the single candle order block, my trade would enter directly from there, and it's a short position. Let me show you where and how I take my profit targets. My profit targets using Fibonacci, spanning from the highest to the lowest, from the last high to the high that to the low that took the inducement. And we have that since we entered the trade from that particular point when it tapped into the single candle order block, we have our target at the 0.27 in the Fibonacci ratio, and of course maintaining the risk at 10 pips, always 10 pips only. And this is what we have it. And let me go ahead and show you that I'm also live in this trade, just so you know. This is my prop firm Rebel funding, and right there I can see that my trade is already running in profit, and my take profit target is a little lower than it should be. So we're going to go ahead and find where we're going to change that, see exactly where that is right now, and we go back in there and change exactly that on the prop firm. And of course I skipped right through that because I didn't want to bore you with the whole typing in the details, but you already know how to do that if you're anticipating being a forex trader right now. But as you can see now, profit target has been adjusted and shifted to the right point where it should be. Now all we got to do about this trade is just wait and break even where necessary. I have rules just particularly for that. So ladies and gentlemen, this is a trade. It's running live, as y'all can see. Now the first trade failed. We did not break even on any data. That was a complete loss. I'll explain that later on, as you can see. But let's go right into the second trade where I jumped in, and from the point at which I jumped in, as you can see, it's not exceeding the high, so it's not a change of character. We're still expecting it to go down on the 15 minutes time frame. And let me pick out the point, the single candle order block. It was a long single candle order block, so I took just about the wick only, and I will show you how to make the wick a little more pronounced, and I mapped it out right from there. I dragged it to the point where it should touch. And of course, when taking this trade, I was a little skeptical about my choice of the wig only, seeing the fact that it already started going down. But being an experienced trader, I know that if it's going to happen, it's going to happen. It's pointless chasing the market, right? So I didn't chase the market. Let's go over to the 30 minutes time frame and show you, see how profound the wick is on 30 minutes time frame. Still single candle order block, but then the wick is what I am using right there. So you can see, right? So I entered the trade right there. That's where you're gonna want to enter the trade. You're gonna enter the trade from where it mitigates your new POI. That's the new single candle order blocks wick. And I entered the trade from right there, as you can see right there, entering the trade. And the profit target is going to be the very same thing like what Fibonacci gave us the last time. That's going to be profit target. The risk is always going to be 10 pips, always 10 pips, never above 10 pips, not 10.5, nothing, just always 10. And we're going to target all the way to where Fibonacci had told us 0.27 would be. So ladies and gentlemen, let's see how this particular trade plays out. And of course, I'll keep you updated in everything and the different targets and why this one did not go as we planned and what we did about it, what we're supposed to do about it. You can see this one's a really long risk reward ratio. We know that we can have another target right about there because this is like a lot of movement, 73 pips, I think. But all in all, our target will remain the same. We'll break even where absolutely necessary only. Ladies and gentlemen, this is the second trade, and with the second order block, the extreme order block, like I told you, and let's see how that plays out.
Now, of course, the first trade did not play out as expected or anticipated, whichever one you'd want to say, because although it was over at least $30 in profit, it did not meet the criteria for a possible break even. Now I have simple rules as well that guides me when I do the break even, right? So first of all, it has to be double your risk. Now my risk is always 10 pips, right? So it has to be 20 pips first before I break even. No if, answer, buts, right? So it was about, I think I checked it, then it was about 17, 18 pips. It wasn't 20 yet. So I could not break even, and that's why when it went back up a little bit into the negative and came back down, that's my rule number two. My rule number two is if it, you know, made a low, went into the negative and came back down, it must exceed the low it made, and it did not also exceed that low. So my two rules for breaking even were not met, so an even was not reached when it came to that particular trade, right? So I let that pass, and it was a clear loss. No regrets there. The market's gonna do that sometimes. You are never gonna always have a win. There'll be losses, there'll be bad days, bad weeks even. But then proper risk management, which is why I always keep it at 10 pips, helps you stay in this game, gives you the longevity you need in this game. Now for the trade number two, as I showed you guys, for trade number two went and met the criteria for break even. There was a low, it got to that low, exceeded that low, and it was possible, it was a beautiful break even, and the market came back us out and stopped us at break even. So we made a profit, recovered the 10 pips that we got. It was also 20 pips, right? In the move, recovered the 10 pips we lost. And now with good risk management, you are not gonna suffer on the rainy days. You're just gonna go through a little bit of ups and downs sometimes, but then you're gonna bounce right back. And that's the beauty of Forex trading. You have to make sure you have proper risk management. Thank you all for watching this video, and as always, please like and subscribe, and please leave in the comment section, what more terms of videos you want to see, because that helps me make the kind of content y'all want to see in the particular direction you all would need it, right? Any questions, whatever doubts you have, whatever clarity you might want on anything, just ask. It may not even be about the topics in the video, but you have a topic concerning Forex in general, just ask and I will be more than glad to address them. I love teaching this. I love doing this. It's not going to have a script of, where I go word for word and things are already pre-planned, but when teaching I tend to flow a little bit. Maybe I go a little bit off course, but that's the power behind teaching. I am here to give you quality knowledge, information, absolutely free. And until next time, see you guys again. Bye for now.